Kunal, you
Kunal?
have a view with regard to IT?
No, I think now you look at all three factors: Reliance going down, HDFC going down, Nifty IT. But all three of them compiled and contracted on a single day, and then you see the Nifty down to 75 points. You're okay to
Not bad,
digest.
right? Exactly.
Exactly. So it's the way you look at now. So I think in that sense, I think it's a good. We were discussing this in the morning also that it's a good day that the market goes into a consolidation because after this 4-5 days of a 350, 400 point uptick for the index, it was necessary for the index to just about digest the trend. Otherwise, the trends in the near term would have been a little bit more on the overbought, on the heated side. So I think it's a good sign that we've managed to have that one-off day for the index. But then look at the phenomenal move across the global markets, especially the US indices, the Asian indices, etc. So that tells you that the momentum and the trajectories on the upside. But I'm a little disappointed with the gift nifty, just 57 points so far. I actually expected more than maybe 100,
But
150
India is
points.
disconnected with these global, entire global events which are coming in. In fact, most of the commodity markets are also disconnected. If you look at each of the markets, what driving them, it's specific gains coming in. Like in the US, you have the the tech AI companies, and then the oil and gas companies because they expect Venezuela to impact them, or for that one, defense companies, to have a coming out with gains, and that led the S&P and the Dow Jones index there. Asia is basically following on what US has done in that sense. Again, AI and tech led there. So the geopolitical impact is very minimal. And normally we see that happening to some of the Middle East exchanges where there is a reaction, or in crude. How the best part is to look at crude, how crude is reacting, and crude has been almost as if that nothing has happened to the crude basket in any way. So I think we are now detached from the geopolitical because we are now more of a insular economy where domestic demand and growth is what is driving the indices rather than global impacts.
I completely agree with you, and it's a very valid point over here, Sajid. The only thing which is missing is that what happens is there are two types of impact which happens. One is a direct financial impact or economic impact, the way you want to calculate. The other is a sentiment impact. Even if there is a 50% jump in terms of the sentiment, that crude is not spiking up, as expected or feared by many investors. That itself should soothe the market participants. It should favor some sectors, favor some sort of companies or commodities or asset classes. So that additional extra bit of a jump should be reflected more on the sentiment side of the market because it's difficult to calculate and be a lot more tangible with such kind of happenings. So that's the only missing part, which I believe that we are not seeing that in our markets right now. Maybe a 100-point jump, 150-point jump, I think could probably soothe the investors.
And Kunal, these moves, so of course we've spoken about IT. Opportunity at all available for a trade in the IT basket?
I believe so, and specifically focused on large cap names. Now, see, you are heading to the results.
Yes.
I think starting off in the next 1 or 2 weeks for the IT names. So there's bound to be that element of mild risk which is there. But large cap IT stocks, I would still believe, are available at a very good support points for themselves. The Nifty IT index has gone through a decent correction, price wise, and I think formation wise. I think they are attractive price zones.
Okay, and HDFC Bank and Reliance in particular, want to try and cover the whole hog. How do they look on charts? Because Reliance, there's been plenty of chatter, right, with the kind of strength the stock has shown. But yesterday, giving up some of those gains, how critical was that?
No, so I think it was like a dash towards the lifetime high, 1610s, where the stock made a high, lifetime high levels. And it could not sustain it on an immediate basis. But that tells you that the stock is gearing up for re-attempts towards the life high levels. Now we compare this with HDFC Bank. If I can probably put both of these stocks large cap wise as a comparison matrix together. HDFC Bank has failed to cross over the lifetime high levels of 1040, 1060 levels thereabouts in the last 2 months or 3 months of the price attempt. And the stock has now struggled back again and fallen below the 1000 mark. So it tells you that HDFC Bank is a far more weaker or maybe a consolidative stock as compared to Reliance Industries. I would be of the belief that when the market gets into that second round of momentum, Reliance will have to play a very strong role heading towards that breakout potentially of that 1600 mark, and the breakout being a lot more sustainable this time around.
Okay, so Kunal, amid a market like this, where is the stock bias this morning? What are some picks?
So I'll go with the buy on Hero MotoCorp, a stock which has been a slight, I would say, a corrective mode in the last 1 month from 6,400 levels thereabouts. The stock had corrected towards 5,500, 600 mark. But now it looks like the stock has formed a near-term bottom and is now looking ripe for a reversal on the upside. So we'll look out for 62.50 as a target for Hero MotoCorp, and stop loss could be kept at 5,875. And the second would be a buy on Muthoot Finance. Now, after yesterday's move on the stock price, it was a classical consolidation breakout. The stock breaking past above a series of price ranges, almost a 150 point range for Muthoot Finance has been broken. So look out for targets in the range of 4,000, stop us at 3880.